Welcome back to Talk Tickers, where we dig into the earnings calls that are really moving the needle. And boy, do we have one today. We are talking about Teledyne's explosive Q4. This was a quarter that absolutely lit up Wall Street. So what does a truly record-breaking quarter actually look like when it hits the tape? Well, let me tell you, Teledyne didn't just have a good quarter. No, they delivered a quarter that's literally going into their history books. And you better believe the market noticed. Instantly. It looks exactly like this. A monster double-digit pop of over 10%. And look at the volume, more than twice the average number of shares traded hands. Folks, this isn't just noise. This isn't a small beat that people are happy about. No, this is the kind of move that screams a major shift in how investors see this company. It's a fundamental rethink. All right, so let's get right into it. What were the headline numbers that sparked this incredible rally? The numbers that, probably had a lot of Wall Street analysts scrambling to update their spreadsheets. Okay, check this out. Teledyne didn't just beat, they delivered a powerful 1-2 punch on both the top and bottom lines. Now, a revenue beat is always nice, right? But crushing earnings per share estimates by more than 8%? Whoa, that is what really turns heads. That kind of beat on the bottom line, it tells you something really important. They have serious operating leverage. In other words, every extra dollar of sales is dropping more and more profits straight to the bottom line. But the big question is, where did all this power come from? You gotta look under the hood, right? Let's dive into the actual numbers, because while the whole company did well, there was one division that was, without a doubt, the star of the show. And wow, this chart just tells the entire story in one glance. Just look at that bar for Aerospace and Defense Electronics, a staggering 40+% surge year over year. I mean, come on. The other segments, yeah, they did fine, nice and steady growth. But Aerospace and Defense, that was the absolute rocket fuel for the quarter, no question. And listen, this wasn't some fluke. It wasn't just because they had an easy comparison to last year. Not at all. This growth was driven by real, concrete, strategic wins in some of the hottest areas in modern defense. We're talking things like loitering munitions, that's a big one, and these super advanced detectors for the Space Development Agency's missile tracking system, plus record sales of unmanned systems. This is the good stuff, This is sticky, high-tech revenue that tends to stick around. Okay, so a fantastic quarter for sure, but what does it mean for the future? Let's talk about their guidance, because this is where the story gets really interesting, a little more nuanced. You had the official numbers they put out, and then you had the tone from management. And let's just say they weren't telling the exact same story. I mean, just listen to this quote from the executive chairman. Largest quarterly orders, sales, and non-GAAP earnings in the company's history. You just don't hear leaders, especially at this level, speak this plainly and this bullishly. This isn't your standard run-of-the-mill corporate PR speak. This is a flat-out declaration. It's them planting a flag and signaling extreme confidence in where the business is heading. And this right here is the key. You have this split narrative. On one hand, the formal guidance for the next fiscal year, it was fine, pretty much what Wall Street was already baking in. But then, on the other hand, you have these absolutely historic results and the chairman basically taking a victory lap. Smart investors see that. They connect the dots and they think, that guidance feels way too conservative. They're lowballing. And all of that brings us to the real reason, the core thesis for why this stock jumped over 10%. See, it wasn't just about one great quarter. It's about something bigger, something we in the business call a quality industrial re-rate. So what the heck is that? Well, in simple terms, it's the moment the market has an aha moment. It's when investors stop looking at Teledyne as just another good but kind of boring industrial company that goes up and down with the economy. Instead, they start seeing it for what it's becoming, a premium, super durable business, a compounder with this incredible hard-to-replicate foothold in defense and space. This quarter, this was the proof everyone was waiting. And what's backing up this whole re-rate story? A rock-solid foundation. We're talking a pristine balance sheet and just a masterclass in how to handle cash. They are generating a ton of free cash flow. They're using it for smart acquisitions, they're buying back their own stock, and get this, they're doing it all while keeping their debt levels super, super low. This right here is literally the textbook blueprint for how you create shareholder value over the long haul. So let's put it all together. What's our take? Where does Teledyne go from here? This is our next call. All right, straight to it. We're calling this one an outperform. The story here has just become way too compelling to sit on the sidelines. So here's our thesis, nice and simple. That massive defense backlog they've built up, we think that's going to feel another beat and raise quarter. Now, could the stock chop around a bit after this huge run? Sure, but we believe the long-term path is higher. The real catalyst, the key thing you need to watch for, is any little piece of evidence that confirms what we suspect, that their full-year guidance isn't a target, it's a starting point. It's a floor, not a ceiling. Bottom line, we see a best-in-class company with a growth story that's just getting started. And of course, just a reminder, this is not financial advice.